What's going on, team? Hamilton here. It's currently 12:49 p.m. Eastern Standard Time, Friday, December 6th, and we're going to wrap up this week's trading through our Markets in Focus video. We're going to start with kind of a broad-based view. How did different asset classes, how did different parts of the market perform this week? Give you my thoughts on it, and then we're going to dive into some actual charts over on TradingView, kind of culminate at the end what we expect. Did things happen the way that we expected them to? What can we look forward to next week and potentially into the end of December, etc. I do want to point out that if you haven't already watched our December market review, please go watch that. It's 90 charts in 60 minutes. A bunch of the trades that we're currently in right now that immediately started working came from that session in particular. So I encourage you to go back and watch that, because not only does it set up the short term, like what we expect to happen over the next couple of weeks, but also into next year. Okay, so it's very important. So let's go ahead and start here and look at how different asset classes, different parts of the market performed this week. Relatively well across the board. Bitcoin, even though it did get dunked on sub 100K, right? We broke up and over it, and then we pulled back, is currently up 6% on the week. Remember, we're looking at the crypto breakout, not necessarily just as a crypto breakout, right? It's an extension of liquidity in the market. When crypto assets in particular are breaking out, it's probably not bad for risk on assets in particular. The Qs finally shoving here. We're getting a weekly all-time high close. We're going to look at that in a second. We're up 3%. We have emerging markets, which is notoriously more risky area of the market, that are showing a nice little bounce back here after a couple weeks of weakness, closing up 1.31, the S&P 500 up 0.82. Bonds are up finally, right? Things are moving in the right direction. Small caps down slightly here, but realistically still in a very strong primary uptrend, so nothing too worrisome there. Basically, most things that we expected to happen during our last Sunday night strat session and then updated on Monday morning once the markets opened up and we saw where weekly trends were starting, ended up happening, particularly the Mag 7 trade, which we're going to get through in a second. I want to go ahead and spend probably 30 seconds just talking through this week's moves in different sectors, because I think it's important. We're seeing rotation both on a relative and an absolute basis. We've talked about it for the last 2 weeks. Now we're absolutely seeing it with the follow through on the Mag 7 stocks, but particularly the all-time high breakout in tech, right? Tech, consumer discretionary, communications leading this week. I don't think that that's going to end anytime soon. I think that that rotation back into tech is going to stick, and we're going to start rallying higher through all three industry groups, not just software and internet. We're going to see a resurgence of semiconductors. So there we go. Finally, semiconductors, which have underperformed since their July high, currently catching a bid, showing absolute and relative strength. We're going to look at that in a second, and they are outperforming on the week as well. So once again, all three industry groups within that tech space now finally working. We've been talking about what happens to the broader market when semiconductors finally start getting bought again, and they are starting to get bought. And obviously we see that reflected within the Qs, a big up week this week, and the Qs up over 3%. So the areas of the market that we expected to start working this week did start working this week, because the kind of groundwork was laid over the last 2 weeks. We noticed that semiconductors were bouncing where they needed to bounce. We noticed that relative strength was coming back in even prior to the bounce. And now we're starting to get the follow through. Obviously, what comes next is all of these setups in the semi space that we're probably going to start seeing on the scanners. We have a couple of semiconductor trades on right now. A couple of them are working very well. I wouldn't be surprised if we start actually opening up a bunch more exposure in that part of the market. So let's go ahead and flip over to TradingView really quick. And let's talk about the indexes first from a weekly standpoint. From a weekly standpoint, we had a pretty good week in the indexes, right? We have an all-time high close in the S&P 500 after spending multiple weeks underneath this 1.618 fib extension. It took a long time for the S&P 500 to re-break those July highs, but essentially when it did, it hasn't looked back once. Now, the big question is this sustainable? When is there going to be a pullback? Nobody knows. If somebody knows exactly when there's going to be a pullback, they're probably going to be a trillionaire. The weight of the evidence continues to suggest that while momentum is waning into these new highs, that new highs are still incoming. We have the seasonality backdrop that we're going to go through towards the end of this video as well that kind of solidifies that idea. As of right now, we're in kind of a melt-up mode. It's a little bit lighter volume, which is not necessarily bad, but the markets are melting upwards, and so we're going to continue to stay long. The S&P 500, assuming we don't pull back drastically here within the next 2 or 3 hours in the market, going to be closing at an all-time high. And the Qs, what an absolute move this week, closing up over 3% on the week, and that is a stick. That is a candle if I've ever seen one, right? That is an exclamation point. Not only did it take the NASDAQ more time than the S&P 500 to re-break those July highs, but when it did, it was violent, right? We had a back test the second week after we actually broke out, and since then it's been pretty much up only, and obviously with the addition of the tech sector now performing well, I don't think this is going to stop. I really don't, at least in the short term, right? Particularly in the long term, I don't think this is going to stop. But in the short term, we might get intermittent, like a couple days worth of a pullback or something, but that realistically should open up an opportunity to buy strong stocks at logical levels that are pulling back with the broader market, not necessarily closing out great positions or even worse, shorting. The evidence does not support that it's time to close everything and short and pack up for the year. Absolutely. As a matter of fact, it's the contrary. Things look fantastic here. So the S&P 500 and the Qs both closing at all-time highs today. Let's look at the offensive sectors of the market, right? These are the sectors of the market that within a strong, healthy bull market, we would expect to be leading and outperforming. And they are. After spending nearly 6 months underneath their July highs, tech finally broke out this week. This is not generally the beginning of a pullback when you're getting an all-time high breakout like we're seeing in tech. This is generally the beginning of a bigger move. And so that's what we're playing it as right now. We've opened up a bunch of exposure within the last 2 weeks in the tech sector, but particularly this week, we opened up a bunch of Mag 7 stocks. We're still looking at adding into Mag 7 stocks. We're looking at Apple, right? We already have a position in Apple. We opened it up last week. It's performing very well for us. We're opening up Microsoft, which is the lagger of the Mag 7. We're going to talk about that in a second, but these are two large components within tech, but also NVIDIA, right? We're looking at opening up more exposure in NVIDIA when it finally wants to rejoin its uptrend. We're full in on tech right now. These types of breakouts, particularly when they take 6 months to really consolidate and then finally break, do not generally roll over immediately. This is going to probably last a while. Moving on from tech, look at consumer discretionary. It's kind of the same idea, right? We get the final breakout, a little bit of a back test, and then it's 3 weeks of basically straight up. Amazon's at all-time highs right now. Tesla's at 2-year highs right now. Home Depot and Lowe are up near all-time highs right now. Those are your largest or fourth largest components within the consumer discretionary space, and we have a position in all 4 of them. Right? This isn't rocket science. Follow strength. This is the second most offensive area of the market right now, and it holds some of the largest companies in the world, and it's breaking out to all-time highs after underperforming over the last 2+ years of this bull market. Once again, these types of moves generally don't roll over immediately, okay? To me, this screams that we have further upside in the intermediate to long term. And then communications, there's been no chill since we finally broke out up and over this consolidation range. For those of you that have been with the group or the community for at least 6 months, how many of these setups have we seen in the market this year that broke out and never looked back? I mean, this is probably chart number 50. And this is coming from a sector standpoint. This is nuts, right? So communications broke out in mid-September, and it's been basically up only, leading to the upside here. Meta leading to the upside here. Netflix, right? A different crop of trades, but still some Mag 7 exposure. Now we're waiting for Google to rejoin that all-time high category as well, struggling a little bit here. But I have, no doubt that if the rest of the Mag 7 stocks are breaking out to all-time highs, Google's probably not that far away either, right? Particularly if we think about the end of the year, fund managers that missed the Apple breakout to all-time highs probably aren't going to be super stoked to reallocate client capital into Apple as it's breaking out to all-time highs. They're going to look at the Mag 7 stocks that have yet to break out, and Google is one of those names, just so happens to be a communications name. And the last sector I want to point out is financials. We have pulled back slightly here, but a very, very strong uptrend ever since we really broke out into all-time highs at the beginning of 2024. Or at least 2-year highs, right? We broke up out of this base, and then we finally broke an all-time high and really started to get moving in the middle of this year back in August. Surprisingly, when the market started to pull back, financials were showing relative strength. Well, not only are they showing relative strength, but also absolute strength. So still, it looks fantastic. Financials have led the market higher for a majority of the last 2 years, and I don't expect that to stop. I will point out that momentum is slowing in financials. We're seeing some of the larger bank stocks not necessarily curl over or anything, but they're just, maybe the market's waiting until earnings are coming up next quarter. Just like the JP Morgan trade back in January of 2020, I guess this year, 2024, January, we took that JP Morgan trade. Go ahead and show you really quick. And once we broke out here, it was off to the races with JP Morgan. But we are starting to see momentum slow a little bit. So we're waiting for this Q1 kind of earnings season to come in. Is money rotating out of financials and kind of into the underserved areas like tech, for example, could be. By no means is this bearish, though. I love it. We're going to continue to own bank stocks as long as they're still working. Speaking of that rotation, let's talk about that rotation, right? Finally, we get the all-time high breakout in tech. But let's also look at this from a broader market standpoint. We've talked about this a lot, right? Think about this really quick. Go back all the way to the 2000s. We're at that same kind of ratio point with the tech sector against the broader market. Now it's probably pretty common to expect some resistance up here. The bigger question, though, is are we going to roll over here within this bull cycle, and are tech stocks going to start really underperforming against the broader market? That's the million-dollar question, because you have to assume that if tech stocks are going to start underperforming the broader market, at least this version of the bull market is toast. It's probably not going to continue, at least in the same way that we've seen it over the last 2 years. But I'm going to argue the other side of it really quick. Yes, we've consolidated here, but isn't this a logical place to consolidate based off of previous tests of this level? In my mind, yes. And we have a relationship that looks relatively the same. The semiconductor space came up, tapped those 2000 highs. It took a little bit, but finally after consolidating, the semis consolidated here for about a year. They finally broke out and they took a huge run up against the broader market. I don't expect tech to look really that much different than this. Is it going to take a year? I don't know. If we go back to that original ratio chart right now, we've really been consolidating here for almost a year now, actually. So if we were to flip this, I wouldn't be surprised. As a matter of fact, I would be more surprised if we didn't continue higher within this current bull market and tech flips this kind of level within this bull cycle. I would be very, very amazed here. So tech, I think, looks great both on an absolute basis, and now we're starting to see it on a relative basis. Are we going to get the stick? Or are we going to start moving back up towards these 2000 highs? If we do, I think that's a big signal to the market and to people that understand this type of stuff that you need to be long tech stocks with some size, right? If we think about semiconductors on an absolute basis, we've talked about this in the past, most recently just a couple of days ago, but the semiconductor trade in particular has kind of been I don't want to say a facade, because facade's a bad word, but it's really been just a couple of big semiconductor stocks pulling kind of everything up. And since the July high, NVIDIA and TSM and some of these giants have kind of slowed down. Their rate of change is slowed, right? They're still some of them are still pinned underneath their July highs. NVIDIA is just chilling after its earnings. And that's caused the semiconductor industry group from a non-equal weighted standpoint to really suffer here. So we found support at these 200-day moving average multiple times. And we've talked about how important that is. If we flip this 200-day moving average and we start trending below it, I think that sends a signal to the broader market that maybe the semiconductor trade, I don't want to say over, but very much like the enthusiasm to buy the dip is probably dimmed, if you will, right? If we start trading below the 200-day moving average, particularly if this starts to slope over, Paul Tudor Jones told us, bad things happen below the 200-day moving average, and fund managers think that way as well, just like discretionary retail traders. So if the semiconductor space does start to flip this, we'd have to ask questions. Should we still be long semiconductors? Should we still be looking to get long semiconductors on pullbacks? But we didn't do that. We did bounce where we needed to bounce. So as of right now, we are getting long semiconductors again. And we're going to continue to get long as the 200-day moving average is respected. If we look at an equal weighted semiconductor space, though, like I said, if you look at SMH in general, which is a non-equal weighted component, we broke out into all-time highs and ran because NVIDIA has been dominating the market. From an equal weighted standpoint, ticker XSD is showing us that we never really made significant all-time highs over the 2021 highs. The broader semiconductor industry group has not performed at the same rate as the big boys at the top. It's just true. So for this quote-unquote AI bubble argument where semiconductors are in this bubble, it's really not true. Semiconductors as an industry group are not a bubble. Maybe a couple of big stocks that happen to be semiconductors are in a bubble, or maybe they are the future. It's not for us to decide as technical traders. We just want to follow strength and trend, right? But I will tell you that on an absolute basis, if the equal weighted semiconductor industry group re-breaks out into all-time high above 273, which we're not that far off, that confirms to me that not only are semis now bouncing against the broader market, but we need to get long with size on an absolute basis as well. We're very close. We're not there yet. You can tell that we're talking about this. We're opening up beginner positions. We have the A-Lab trade. We have some NVIDIA trade. We have an old school TSM trade. We're not going out and buying every semiconductor on the list right now. But if we do start flipping this level up into all-time highs, I think that opens the door for more semiconductor plays, and therefore we're building that watch list out right now. Speaking of semiconductors and higher beta in general, if we go to ARK, which is kind of the de facto high beta trash trade ETF, we talked about this multiple weeks ago. Some of the biggest trades that we have on right now directly come from this style of setup. It's a stage 1 and a stage 2 high beta growth stocks, crap stocks. Think SoFi. We have 1,000% position on SoFi right now. We have 1,000% position on DocuSign right now. We have a multiple 100% position on Zillow right now. We have a position that's up a couple 100% in Zoom, Affirm, right? Just name off any of these, Lemonade, name off any of these high beta stocks showing this exact same setup, and we're probably in it and we're probably making money. So the question is When is that going to stop? And if you think about market, cycles, the Wyckoff market model or the Stan Weinstein stage theory, these stage breakouts after a prolonged horizontal channel, not saying they can't pull back and retest this. They absolutely can, and quite frequently they do. But this should be viewed as a secular breakout into a multi-quarter or potentially multi-year run. It absolutely should be, right? The last time ARK broke out and really started to run, it took it almost a year before it started to top out. We are in week 4. Like, there's so much more time for this to potentially continue to break out. And we can tell that there's a risk on mentality in the market. Liquidity is rushing the market and all these different types of asset classes. And you don't get these types of moves in high beta names if risk is not being thrown around left and right. You don't want to own SoFi and Lemonade and Affirm. And after these massive historic drawdowns, if you're not willing to risk your capital in higher beta areas to get higher rewards, right? If we look at some of the breakouts that we're in right now, we're in 1,000% win in SoFi. Bought it off the $10 pivot, currently trading $15.99, right? We're in the Affirm trade, multiple hundreds of percent here. We're in the Zillow trade. As a matter of fact, we're looking to add into the Zillow trade, right? We're into the Zoom trade. We're into the Docu trade. All of these stage 1 into stage 2s that have paid us out and continue to pay us are huge right now. Look at the DocuSign trade right here, right? So the high beta trade, is it over? No, absolutely not. I expect it to continue. I'm going to go out and say probably Cathie Wood and ARK are going to be household names again by the time this bull cycle is done. I'm not going to sit here and tell you that it's going to retest all-time highs, although I wouldn't be surprised if it eventually does. We're in that type of market environment where everything is melting up. High beta stocks are getting bought. I have no idea. But I do know that this is the time to own high beta stocks. It has been for the last couple of weeks. We own them. We're going to continue to own them. And we're going to add into a bunch of these that are already winning for us as we find new levels and pullbacks to be able to take advantage of. Let's flip the script, though. Let's get away from ARK and high beta and let's go to the blue chips, right? So Mag 7, we've seen a bunch of rotation into Mag 7. I got to slide the circle up. That's how great of a week it's been. We nailed this rotation. So give yourself a pat on the back. If you took the Apple trade last week, if you got into the Meta trade, if you're into the new Tesla trades, if you're into the Microsoft trades, this has been a fantastic week for you. We nailed these almost perfectly. And for those of us that have owned these things for multiple months, we are up huge right now, which is absolutely awesome. So after spending a couple of weeks consolidating underneath the 1.618 fib extension, we asked ourselves, is there really a bull market if Mag 7 is not performing? Doesn't necessarily need to outperform, right? We've seen high beta stocks outperform against Mag 7, but they do need to continue to go up. Listen, we live in a cap-weighted world, and if the largest stocks in the market aren't going up, it's going to be very hard for the indexes to go up. It doesn't matter how great market breadth is. And so we asked ourselves, in a world where Mag 7 starts to roll over here and comes back down and retests, what type of market environment do we find ourselves in? But we didn't. We broke out on an absolute basis. Not only are we seeing a rotation in on an absolute basis, but we're seeing a rotation in on a relative basis. Mag 7 stocks are now outperforming other areas of the market this week, and we've been able to take advantage of it, right? So we opened up the Microsoft trade this week. We're finally clearing this overhead supply that we've been in. I love this trade. I'm targeting all-time highs and beyond. Why would we not? We took the Apple trade last week. Look at the stick on this. 2 weeks in a row, finally broke out. We're following through. We have a 260 to 265 price target and beyond there. Why would we not? The Amazon trade that we have on, look at the all-time high move. These are not moves that are probably going to pull back within the next couple of days, right? These things are probably going to continue to go up for the foreseeable future, particularly because we're trading through kind of this 6-month window of this quote unquote Goldilocks zone, right? The November through April corridor, historically the most bullish 6 months out of the year. Why would we not put some of the blue chips on? We did that earlier and we're getting paid handsomely for them. I'm not going to go through all the Mag 7 trades that we put on, but obviously you can see these have worked absolutely beautiful for us. And so we're going to continue to own these things. For those of you that missed the Mag 7 setups, there's going to be an opportunity to buy pullback. So don't kick yourself in the butt, particularly if you joined during Black Friday sale. Some of these were already out. You're sending me questions. Can we own Apple? Can we do this? You don't feel like you need to play the catch-up trade. There will be periods of consolidation. We will get some sort of market pullback, have some dry powder available, and you're going to be able to buy these things. But we need to make sure we're buying them at logical levels. So if they don't continue to break out, we don't get dunked on immediately, right? We always want to have a stop on the books and a reasonable place on the chart to say maybe this isn't going to continue. And so if you missed it, don't worry. Your time will come. It'll be all right. Speaking of seasonality, this is kind of the last thing I want to talk about here. If we go and we actually look at the seasonality of, we can look at SPY and then the Qs here. We were just talking about how we're kind of going through this 6-month Goldilocks zone where these are the best 6 months out of the year. And if you think about the November, December, January, February, March, April corridor, you want to be long through a majority of that. It tends to be a very, very, very good time to be long the market, particularly the blue chips, and then also an honorable shout out to small caps as well. If you look at the Qs as well here, we generally have a very, very strong 6 months here. So for those of you that are in trades right now that are working and you're thinking like, hey, should I be closing these? Listen, we've opened up exposure out into June of 2025 in some instances. We're going 6 months out right now. We're trying to make the most amount of money we can through this 6 month window. And we grabbed some incredible positions in November buying the Junes. It is now December. So we bought 6 and 7 months worth of expiration. A bunch of these trades are already free for us. Why would we think about closing those to allocate capital towards other areas that have not yet broken out? Don't do it. Don't do it, particularly if you're working full time and you can't sit in front of your computer all day looking at charts. Let your best trades continue to win. That is how you take the 2 to 3 to 400% winners. And within a couple of months, even if they're slower moving, they're going to be worth 7, 8, 900 and 1,000% trades before you actually want to stop out of those, assuming that the market follows the seasonality trends, right? This is how, I don't want to say professional because I think that'll get me in trouble. But this is how, consistently profitable swing trading, particularly if you are working full time, this is how it works, right? Find a time frame that works for you. Own the stocks, own the strongest stocks. Don't be afraid to own these things for an extended period of time. Okay, so I love this week. This week's done very well for us. We made a bunch of money. I'm going to go ahead and flip over to the Discord for a second just so you can kind of see some of the stuff that we're looking at here. I'm not kidding when I'm telling you to hold on to your trades a little bit longer than you're expecting. This is the insider group within Discord. If you're inside of the market research portal and you would like some more one-on-one or a more personalized experience, we do offer this as an additional buy-in. It does come with a free, not a free. Whoa, no, you are paying, but you are required to buy a 1-year package of the market research, and then you come into the Discord with us and you can trade with us live every single day. But it really does help, particularly the people that can't hold on to the winning trades long enough. You can see that Brian here opened this back in October. It's currently December. It's up 800%. Here's that rubric trade. We just had an add in on this on Wednesday, SOUN. If we keep going through, you can see some of the another 1,000% or 500% on the docu. Growl's up 100%, turned it free. Here's a tranche of airlines trades that are up multiple hundreds of percent. You can kind of see the positioning that we're going through. But yeah, once again, if you have a problem holding these trades, join the group. We will help you. We will help you manage this type of stuff. Type of community matters a lot, particularly if everybody's on the same wavelength. Everybody has a job. We're not sitting around being bums, day trading all day, right? It helps a hell of a lot. This has been the best year we've ever had as a group. So shout out to the guys inside of TTI, and I appreciate it, each and every one of you. Okay, so once again, my name is Hamilton. I'm here at the Trading Initiative. This is the Markets in Focus kind of review video for Friday, December 6th, 2024. It's currently 1:12 p.m. So assuming that the market doesn't actually fall here at the end of the session, it's been an incredible week. I look forward to talking to you guys on Sunday. Enjoy the rest of your weekend.